All right, let's dive right in. In the incredibly crowded space of Indian healthcare, there's one company, Artemis Medicare Services, that's making a really high stakes bet. They're trying to go from a single, super profitable hospital into a full blown national healthcare empire. And the big question for any investor watching today is pretty simple: can they actually pull it off?
This single slide really captures the entire story. On one side, you've got the Fortress. That's the dominant cash printing hospital that Artemis was known for years. And on the other, the Empire. That's the big new blueprint for a sprawling network. They're trying to take that Fortress magic and scale it up nationally. It's a huge pivot, a really ambitious move. Now, this is where it gets really interesting. This chart shows you the financial engine that's making all of this possible. We're looking at a metric called ARPOB, average revenue per occupied bed. And just a look at Artemis. At over 83,000 rupees, they are just towering over the big guys like Medanta and Max. I mean, this isn't just a number, right? This is proof of just how powerful their premium model is. It's what's generating the cash to fund this whole expansion from the inside. So, to really understand where they're going, you first have to understand where they've been. Let's talk about the foundation of their success, the Gurgaon Fortress. For more than a decade, this was Artemis, a single 400-bed hospital in Gurgaon, right in the heart of India's medical boom. They built this incredible, almost impenetrable moat around themselves. How? Two key things. First, they attracted a really high-value patient mix. Nearly 29% of their revenue came from international patients, which means higher margins. And second, they just perfected their operations as one super efficient unit. But then, in 2022, everything changed. Management basically decided that the single fortress model, as good as it was, had a ceiling. So, let's get into the Empire blueprint and see what they're building. Right, so they saw the limits of just being in one city, and they made a major strategic pivot. The goal wasn't just to be the best hospital in Gurgaon anymore, it was to build a whole scalable ecosystem. This slide shows that shift perfectly, from the single flagship to this new dual-track strategy. And the target? A massive 2,000 beds by 2027. So track one of this plan is all about strengthening the core. They're actually tripling the capacity at their main cash cow facility in Gurgaon, taking it from 400 beds all the way to 1,100. And the really crucial part here is how they're paying for it. It's mostly through internal cash flow and some smart debt. For shareholders, this is a huge green flag because it means minimal equity dilution. Now, track two is where the real empire building kicks in. And it's pretty clever. Instead of building huge, expensive hospitals everywhere, they're using these smaller asset-light models. You've got Artemis Light for specialized surgeries, Daffodils for birthing centers, and get this, with the capital outlay of only around 5 crore per unit, they can test new markets like Raipur and South Delhi with very low risk. It's super capital efficient. And even with all this aggressive expansion, look at their financial discipline. They are committed to keeping their debt-to-equity ratio below 0.5x. That is just a powerful signal of really prudent, careful management. So you might be asking, where does this kind of discipline come from? Well, it's not an accident. The management is backed by the Kanwar family. Yep, the same promoters behind the industrial giant Apollo Tyres. They're basically bringing decades of that hardcore industrial financial discipline into the healthcare world. It means growth, yes, but never reckless growth. Okay, so let's just quickly sum up the bull case. You've got this elite, profitable core with that incredible ARPOG. You've got a really smart, capital-efficient way to scale. You have rock-solid financial strength. And on top of all that, you're riding these huge macro tailwinds from what people are calling medical tourism 2.0. It's a very, very compelling story. But of course, every compelling story has its risks. And now we have to put on our skeptical hat and look at the bear case. It all really centers on one critical challenge, what I call the geographic trap. And this brings us to the single most important question that any investor has to ask themselves. The premium model, it works brilliantly in one spot. But can you really take the magic of the fortress and replicate it across an entire empire? That's the billion-dollar question. This map just lays out the whole bear case visually. Look at this. Up until 2024, nearly 90% of Artemis's revenue was coming from this one single micro-market in Gurgaon. That creates a huge vulnerability. So now, these new projects in South Delhi and Raipur, they're the first big test. Can they actually copy-paste their premium moat into totally new territories?
That is the biggest execution risk, bar none.
So let's break down the primary risks. There are three. First, that cluster concentration in Gurgaon we just talked about. Second, the massive execution risk of trying to scale at premium model. And third, dilution risk. That recent funding they got from the IFC, it's strategic, yes, but it comes with a planned 15% dilution to EPS. That could hurt the stock's performance in the short term, especially if the new beds take a while to ramp up.
So we've got a powerful bull case on one hand and some very real risks on the other. How do we put this all together? What is the single deciding factor for the future of Artemis? It all boils down to this one core tension. Can the proven incredible profitability of the fortress survive the messy, complex execution of building an empire? This is the fundamental problem they have to solve. And what's crucial to see on this timeline is that this wasn't some sudden, rash decision. This has been a very deliberate, multi-year plan. You see them in FY20, consolidating and perfecting the fortress. Then the pivot happens in FY22, when they drop the new blueprint. And now in FY24, they've hit financial maturity, with profits crossing 49 crore and securing that key IFC funding to really launch the empire. So here's the final verdict for investors. The investment play here is not just about counting hospital beds. It's a bet on management's ability to, and I love this phrase, industrialize their unique brand of specialized premium healthcare without ruining what makes it special. The catalyst to watch? If they hit that 2,000-bed goal by 2027 while keeping their margins high, a major re-rating of the stock seems almost inevitable. The fortress has been built. Now we all get to watch and see if the empire will rise.